People just don't seem to understand that everything our government, quote unquote, gives us, we pay for. Because even there's this new home heating rebate. I don't know if you saw this, but the province is going to rebate
$1,000.
It was, $200. Now it's going to be $1,000. And people were celebrating this. So like, wow, what a great guy.
This is for this year. This is for the here and now, right now, this winter to help people. We'll continue to evolve with it.
And he's like, oh, I'm the champion of the people. Do you think that oil is going to be cheaper next year?
No.
Do you think that prices are going to be lower next year?
No.
So are we going to give them a bigger rebate next year?
I mean, we'll get a higher
Well, the
tax
only
bill,
way
and they'll do a
the only
bigger
way we're going to be able to
rebate.
give them a bigger rebate next year is if we take more tax money from people. Maybe you wouldn't need the government to give you money if they didn't take so much money to begin with.
When I was broke, I had rich habits. When I was broke, I had rich habits.
Oh, it is recording right now. Okay, sweet. You want to start with taxes?
I want to start with taxes because I'm so frustrated. I don't know why I get so worked up about people online. I can't help myself, but there's been a lot of talk about taxes between the property tax stuff, which, again, people didn't realize how their property tax is actually going to be calculated. I did a little video on that because people were very concerned. And yes, property taxes are going to go up, but not the amount that they think. But then all the stuff about municipal spending, and people are losing their mind because there have been cuts to municipal spending. And people just don't seem to understand that everything our government, quote unquote, gives us, we pay for. Like, do people not understand how that works? Because even there's this new home heating rebate. I don't know if you saw this, but the province is going to raise the rebate.
$1,000.
It was $200. Now it's going to be $1,000, and they're going to raise the household qualification up to $85,000. So if your household makes $85,000 or less, you may be entitled to $1,000 rebates based on effectively heating your home. And people were celebrating this. So like, wow, what a great guy. You know, what a premier, doing all this things. And he's like,
just paid for it.
And he's like, oh, I'm the champion of the people. Like, they rolled out this video. It's propaganda, but like, we're going to continue to fight against those that feel you should pay more. It's like, you realize they're just take your tax money
And give it back.
and then they're just giving it back. And they're giving it back so that you can pay the oil companies and Nova Scotia Power. Maybe you wouldn't need the government to give you money if they didn't take so much money to begin with.
Can you blame people though, because the way that media and the way that it's all presented and laid out for somebody, it's hard to not get confused and be,
I guess,
like,
man, but have a little
you know what I mean?
bit
Be
of
excited
critical
about it because
thinking.
the way they propose it, they're like, look at all these amazing things that are being done, and then the tax hike is kept as a separate item, and don't draw the two together. Like, I find when there's tax hikes or any sort of cost going in, they don't necessarily tie it to like Tim Houston or Trudeau or like anything like that, and then when the money's coming out, they tie it back to them.
Yeah,
Right? This is like, it's
don't-
marketing. It's like, it's literally marketing on a
It's
political.
a failure of the
political level.
education system to not understand how every single thing that the governments give you at any level, from municipal to provincial to federal, is your money coming back to you, right?
Yes,
You have
100%.
sent the money, they collect it, they aggregate it, and they distribute it.
Yeah.
But that's all it is. It is just your money coming back. So people don't need to be high-fiving them. And my concern with that particular one, and I'm not saying it's not beneficial, and I'm not saying that people don't need it, but we could have also just not taken the tax money from them to begin with, and then that would be a little bit simpler of a system, and maybe they wouldn't feel as poor. But you create this further reliance on people in government because, man, do you think that oil is going to be cheaper next year?
No.
Do you think that prices are going to be lower next year?
No.
Do you think that Nova Scotia Power is going to be cheaper next year?
No.
So are we going to give them a bigger rebate next year?
I mean, we'll get a higher
Well, the
tax
only
bill,
way
and then they'll do a
the only
bigger
way we're going to be able to
rebate.
give them a bigger rebate next year is if we take more tax money from people. And how people don't understand this, it
Chandler's
drives me
just
insane.
cranky. He's not qualifying for the heating rebate this year. But everyone, welcome to the Master Keys podcast. I'm Neal Andreino. He's really mad.
Yeah.
And I wore a really bright shirt today. So if you're watching
Dale,
this,
me say Dale. Oh my gosh, that shirt, buddy, turn it down. I need my sunglasses.
B&V, who produces the podcast, said our shirts aren't bright enough. And I was putting on my shirt this morning and I saw this hanging and I was like, all right, you know what? This is the shirt.
Should have left it in the closet. No, I'm just kidding. It's a cool shirt, man.
This is
I'm
the
pretty
shirt.
fair skinned. I might catch a sunburn from that t-shirt.
Yeah. We're going to start with our usual
Okay, yeah.
5 new subscribers. Number
Let's
1,
go.
Honest Abe.
Honest Abe, man.
Gaetian Tremblay.
Gaetian. Merci.
My Stuff mailbox, but it's just like a logo of a mailbox. I didn't know you could have logos in your YouTube handle. KXIIC.
KS.
KX.
Oh.
And Alex Forrester.
All right. Thank you so much. We really appreciate the follows. We
Rafa
appreciate the
Sood.
likes. Rafa Saud?
Yeah, agent.
Oh, yeah,
Rafa's-
right on, man. Right
Thanks,
on.
Rafa.
Preach.
Anyways, let's get started. Today, our main topic is going to be about this housing market seems to be coming back.
Oh,
You're getting all fired up about it.
okay.
You're like, yeah, multiple offers, house prices are going to the moon, inventories are so low. What up? Canada is the safest real estate market in the world. So we're going to talk about what we both think and why we think it might be going up and why it might not be going up. I think Chandler and I might have differing opinions on this.
Perchance.
The pessimist in me.
Well, also,
But-
you're thinking now a little bit more nationally, internationally, because, you know, big fancy guy, fancy shirt. He's investing in the States a little bit now.
This guy. It is a fancy shirt. Continue.
No, but like you're looking at a little broader. I'm pretty hyper local focused here, but we'll unpack that.
Okay. All right. Fine. I'm good with that. But before we get into it, we're going to do some news. And so, would you like me to go first on?
Yeah, because I just have
My
some
little news
more
headlines?
tax stuff I want to talk about. So yeah, let's hear your
he's
news.
fired up with taxes. So, Mark Morrison is a real estate lawyer in Toronto, and he is saying that the private lending market is going to be one of the big turning points and actually part of the causer of some downfall of our real estate market across the board. Basically, what he's saying is that 8 to 10% of the market in a lot of bigger provinces like Ontario and BC is actually held by private lenders. Now, it doesn't always mean it has to be 10, 15%, but they are into the non-Big Five banks. And he's basically stating that they a lot of times came into play because the Big Five banks are very risk adverse and they wouldn't lend in the outside towns or the areas around the cities.
Just before, so would that include things like credit unions or?
That would include credit unions. Yeah.
I got to turn this thing off. I thought I just did, but
We had a rule put in place where there's no phones, especially no ringers in the pod studio. As you can see, Chandler doesn't follow rules very well. So
we're gonna need a dress code here
gonna
soon.
need
You're
a
not
dress code
careful,
soon
buddy. All right, let me figure this out here. Boom. I think I had it set up so that my
iPhone.
rings could get through even the strictest of silencing.
Really?
Yeah, just to be safe, man. We got to be safe out there.
That, for me, wow. Wouldn't you want silence?
Well, if you call me at midnight, Neil, I want to be there to answer. If the G-Wagon
if you
broke
call
down.
me at midnight, I'm not answering. If you call me past like 9, I'm not answering. I feel like there's got to be a cutoff at some point to regain. I
think we should push to 6:15 a.m. But anyway.
Yes. Okay. Anyways, long story short, 8 to 10% of the market was these B and below, we'll say, lenders. And they were lending in a lot of periphery areas. And we've always talked about how, like, around Toronto, all the periphery areas have the highest growths.
Yeah.
Like 20% up a year, 30% up a year, crazy numbers. And it always worked because people were able to buy with the private. Their home went up in value. They could sell or move on to the next one or get enough equity that an A-grade bank will step in, but they'll step in at 50% loan to value or 65% loan to value. Well, guess what? As rates turned around and we had some price drops in the last couple months,
Can't get out.
they can no longer get out. And as the renewals are coming up, these B and C lenders don't want to renew. And that's something people don't think about. It's like, well, I have the mortgage of 800,000. I can just keep floating that. And it's like, it's a tandem thing. Both you and the bank have to agree to renew.
Yeah, you can't be just like, no, I'm good with it. I'll make up the difference. Bank will be like, thanks, but no thanks. Pay us out.
Exactly. The bank can say, we want to walk from this. When you sign your mortgage document. So thoughts on that? That was something that I'm like concerned about. I'm like, I think that's going to be a big downfall is that banks won't necessarily renew. They start to effectively call their loans, but they're not really calling the loan because it's just simply like, we're up for renewal. And that's the whole point. We agreed to be a part of this term for 3 years or 2 years or 1 year. And now that term's done.
It's like a fixed term lease.
And yeah, we no longer agreed to
You're
work
no
with
longer
you.
welcome here.
Yeah.
So I want to add another layer to that because this is something we talked about a little bit. The rampant mortgage fraud in some of those same areas you're talking about. Call it periphery to Ontario or to Toronto. And just to recap for people who maybe missed that episode or those news headlines, these were often individuals who are new to country who were being really taken advantage of by unscrupulous mortgage brokers who...
Okay.
I
I wouldn't say it was. It wasn't the mortgage brokers. I would say the mortgage brokers are being pushed to have to do this for people because everyone's coming in being like, I want a house. And like, well, it's $1.5 million. And like,
okay, let's say there was blame
like,
to be spread around.
You sell some stuff on Kijiji, you qualify. It's like TLC or whatever when there's just like, oh, these two are looking, their budget's $3 million.
That's true.
People were doing it to them. But anyways, all right.
There was blame to,
it takes two to tango.
Go around.
It takes two to tango.
That's a good point.
Yeah.
I mean, you are wearing your tango shirt today, so who am I to argue?
putting my coat on here.
So, so one way or another, you had buyers who were not qualified to purchase, and you had mortgage professionals willing to help them qualify through fraudulent practice, which was faking job letters, faking identities, faking
all the
cash
paperwork
savings,
effectively. Yeah.
faking the whole darn thing.
Yeah.
And they got paid big fees for that. The people got into the homes, and those people were somewhat cushioned by the fact that in some cases they had large down payments, so they could actually have some equity in the home. Or to your point, the houses kept going up in value, and maybe at some point, once they did actually get some income coming in, and if their loan to value was manageable as the home appreciated, they could get another lender to step in with better rates and a better product.
Yep.
But the other thing that happened in some cases would be that the mortgage professional would take all these fees up front, say, hey, it's going to be all these fees to apply and blah, blah. And then they would get them to the 5-yard line when they've waived conditions, if they had any conditions. That area of Toronto at the height of the market, there were no conditions anyway. They've sunk all this cash in. They're locked into this deal. And then the broker says, ooh, that lender that we thought we had lined up for you, they're no longer going to do the deal. So if you want to go forward with this, you're actually going to have to go over here to even a worse product, higher interest rate, more fees, all of these things. But the alternative is you've lost your application fee, you've lost your deposit on the house, and you could potentially be sued. And so these people were at that point being squeezed into these other products.
Yeah.
And that was a small section of the market. But to hear you say 8 to 10% of the market is these alternative lenders, I would say of that little bit, a good chunk were those sort of products around areas of Toronto, around areas of Vancouver. Yep. And those are going to be major problems.
Yeah, exactly. And that's where they're expecting a big turnover. And we'll talk about it a bit later. I don't think the grade A banks are going to be the big issue. But it sounds like you got it out for mortgage brokers this morning.
No, not at all, man. Not at all. But I didn't want to, I guess the tricky thing is a lot of the people that were getting involved in that situation were new to country, right? And in a lot of cases, they were naive to the whole process, and they're being told these things, and then they were seeing their friends buying stuff. And so I do think that they were being led by the hand, though perhaps some did realize that what they were doing was kind of wrong.
Yeah.
Whether they feel that it was wrong and they had no choice, I don't really know. You can't, every situation is different. But so I think that's part of that. And I don't know what the solution to that is when those notes come due and it's like, well, we can't take you out with a primary lender. We also don't want any involvement with you ourselves. So do you think private money is going to pull back like that, though, if someone's making the payments?
Yeah, I think they're going to start to do it because for risk mitigation. Like if things start going down and you can't project how long it's going to go for, it's hard for them where they can't run that risk to, like, it's just too high of a risk at that point for anyone to get involved. Especially if they start to realize that they can't make the payments, right? Like,
also the reality of private money is that it's not like the private lender, if you will. It's not their money in their bank account.
That's what I mean.
It's investors. They need to convince their investors to continue to do this, and at some point, their investors might be like, "No mas." Like,
this is what's going to happen: is as all these values and people are losing money across the board, investors pull back their money, so the private lenders are going to have less money to give out. So they're really going to start trying to cut files that have any sort of elevated risk. And so I think you will see people doing that. And I think then on the flip side, you'll start seeing opportunities in better areas coming up, and the private lenders are going to want to move their money from these higher risk locations to lower risk areas, right? So I think
that makes sense for sure.
You will see people pulling back, and I think like I think what will really turn it over is delinquencies. I think delinquencies will start to rise, where people won't be able to make their payments because they can't just keep re-leveraging their home or doing whatever they were doing, and that's going to then drive like their risk tolerance is going to go way down because they're now like, oh shit, we have 3 or 4 delinquent files that we don't usually have this many, so now we need to start pulling these back and like let's get ahead of the bud here and be like, okay, we want to get rid of these 5 or 10 files that we don't like. So anyways, I thought that was an interesting article just to see like that's kind of where they see the turning point, and to me it kind of made sense. And it's the same thing kind of happened in the States, right? All the private banks, which they all are there for the most part, are the ones that took the beat down when the last rate spike went.
Yeah, and their banking system is very different. That what constitutes a private down there is more just an independent bank, where our banks are a bit more institutional. I don't know if those are the right legal words for it, but yeah, it's a very different banking system over there, or down there, I should say. Mm-hmm. At some point, though, do you think that, because banks make their money off of lending, that's how, that's and they are responsible to their shareholders. They want to show growth.
Yep.
Do you think they will be able to lend enough product at these higher rates
No.
to keep? So at some point, aren't they going to want the business and start going out there and trying to lend again?
They're going to want the business, but it's still, again, the risk is not worth it. Like, they cannot, like, the bigger the bank too, the less risk tolerance they're going to have, because it's one thing to not make money. It's another thing to start losing money.
Right.
Right.
Yeah, yeah.
And so if you're putting in a bunch of delinquent files and you get stuck with a bunch of properties that aren't worth even what you have owed against them, that looks a lot worse than reducing and being risk tolerant and having a full like control over your portfolio and what you're doing with your client's money.
Yeah.
Right. Like if you're running your client's money in stagnant or low returns, or you're running it at a loss, people are always going to be much happier with the low returns than taking huge losses. Right. Everyone's going to hear of a friend who lost a bunch of money in some sort of format. And they're like, well, I didn't lose any money at least, right? Like I'm flat or whatever it may be.
There's going to be, I mean, this all sounds like higher banking fees. Like you're going to go into these banks and you're going to see these signs like, we're evolving to serve you better.
Yeah.
And it's going to be like, oh, so basically now it costs more money to take cash out of the ATM. My account has a new feature, but I didn't want it, but my account now costs $5 more a month to run. So I bet you they're going to start nickel and diming. I tell you now, if you go into the branch and you see signs about how they're changing to serve you better, that means your rates are going up. Your little fees, your transactional fees, because they make money on lending money and fees, and that's about it.
But I think, again, I mean, that's going to provide an opportunity for the private banks to continue to grow. And you're already seeing that in the fact that we've had this immense amount of growth in the last few years of the private banks. And private banks, again, don't mean 10, 12%. It can mean a 5%, 4%. They can be CMHC insured. So they're actually undercutting the big five banks, even on a regular residential mortgage. And so they're growing massively because they have way less overhead. And I think if they increase fees, you're going to see a lot more online banking systems that come into play, especially nowadays with technology, where like my generation would be super comfortable to keep their money with a bank that has no physical location. Like I know I was just talking to my mom yesterday and she's like, I need to talk to a person when I go in and do things with banking.
That too.
Yeah. And it's like, I hate having to go there. Like it drives me insane and I don't see any need. The only time I physically really need to go to the bank is when I need physical cash.
Yeah.
When the banker needs like, oh, we need
Bank
to set
drafts.
a meeting to do this. I'm like, man, can we not just do a phone call or a Zoom or something? Like, why do I need to go there? Oh yeah, and bank drafts. But like if there was a way around that, which there will be, because they'll be like, we can just mail them out like overnight.
Yeah,
we can just
express courier.
We can express courier a bank draft. And so like every city has one location that they send them out from. They might not even have a forward facing. They may not even offer that. Or they might have ATMs that can friggin' print a bank draft. Like it, I think it's going to provide an opportunity. Like again, this is, as it's all like bad and gloomy, I feel like it provides a ton of opportunity for the next group of people to come in and try and make a wave out of this.
Yeah. Changing the guard for sure. I'm going to switch into something totally different, but it kind of loops back to stuff we covered in previous episodes. We've talked about Blackstone for a while. They're a major kind of institutional landlord down in the States.
Yeah.
Not enough currently to say move the needle. Like they don't control the rental market as much as some people may think, but they've been sort of, I don't want to say targeted, but people have been watching them closely because they took this model of buying out like subdivisions, like full tract housing style subdivisions.
And they're one of the biggest.
Buying big portfolios with an approach that's clearly geared towards almost providing a rental service that's a little bit different. It's more targeted towards people who sort of don't want home ownership. It's kind of like going to be like the skip the dishes, like everything can be taken care of for you with these organized communities that have no sort of component of home ownership.
Yeah.
And they have pretty aggressive expansion plans. But one thing that they did during COVID was actually they were really lenient. They actually went beyond the federal regulations in the States for, that required a period of non-evictions and rent holds and all these things. And they kept their non-eviction policy up longer than required. They stopped charging fees on credit card payments for rent. They got rid of some late fees. They allowed people to take on extra tenants. They actually did quite a few things, but that is stopping. It's now, the grace period, if you will, is over. And they have begun the process of filing mass evictions across a few different states.
For like outstanding rents and people.
Okay. Yeah. So we're talking hundreds and hundreds of evictions, to the point that they actually contacted governors in some of these states and said, just so you know, this is coming down the pipeline. So they're going to get a lot of hate. Ironically, they were fairly accommodating, more accommodating than they technically had to be, but they're so big now, and they are responsible to their shareholders. That now it's like, well, it's time for us to collect on these rents, and I just feel it's going to be something that we see in the news here in the next.
100%, and I agree. Like that, we'll see it in the news. I just don't get why they hate it. This is like with everything. It's like you just said about the taxes earlier. Like the government gave out all this money, and now they're pulling it back, and like we don't like everyone's kind of pissed, but everyone just kind of deals with it because like, well, we have to pay it. Right. And it's the same with like rent. Like why? I don't know why there's such a weird thing around rent that like it's something that people expect to not have to pay. I don't get this like, they're like, oh, what? It's so terrible what they're doing to people's families. And I agree. And it sucks, but it's also like, you agreed to pay this. Like if you don't pay your phone bill, you don't get a phone. You don't pay your car bill.
Your credit.
They take your car.
Like you miss $100 phone bill thing and your credit gets dinged. You missed a $1,500 rent payment and nothing happens to you.
No, you're steal it. If you steal something from a store, you go to jail. Like it's like, yeah. So anyways, I agree. We'll probably see hate, especially because they're so big. So like they're filing mass evictions. But that's
no one will read the fact that like, oh man, they actually let these people kind of accrue a pretty significant arrears. And didn't evict them. Yeah. And now they're just kind of saying, well, now that grace period is over. That seems kind of reasonable.
That's going to be the toughest part about this real estate market now is the bad debt. So yeah, you can get super high rents, but you're going to end up accumulating a ton of bad debt from people that are falling behind. Yeah. And is it going to balance out to actually be able to make a return on your property still?
Which is why, like, and again, not to bring it back to my anger at social media stuff, but remember when everyone was posting online, like, yeah, I can't wait for these interest rates to cause all the landlords to lose everything, and there's going to be a great reset. Like, those people are still waiting in their mother's basement on the computer, waiting for this giant reset when they're going to be able to buy homes for penny on the dollar, and that landlords are going to lose everything. It's like, no, unfortunately, the reality is that rents go up.
Yeah.
Right? Like, and how people have no fundamental understanding of anything.
Well, rents went up and everything that everyone spends on went up in cost too. Like it trickled into every single thing. We have inflationary pressure on all of our expenses.
Yes.
So even if you're living at home in your mom's basement, like your computer parts cost more. Yeah. You might be able to get a graphics card on the cheap.
Meatloaf she's making upstairs costs a little bit more. Yeah. So like on that note, I'm going to say one more thing about tax. Okay. Because
did you just pay a big tax bill recently?
No, I'm just like some of the stuff people say online right now, like taxes at the front of everyone's mind, and people don't seem to understand this connection between, the government, what the government does, and the fact that you have to pay for it. So the City of Halifax that I think was overspending in prosperous times the last few years, or making promises to spend, has had to pull back on that because for anyone who doesn't understand this, the municipality is a household. Yeah. Right. They have income. Yeah. And they have expenses, and they have to balance those things. And when times are good, they get a little flush, and maybe they make some dumb purchases. Yeah. Right? And then times get a little tight, and they have to stop spending, right? Because they can either make more money, which is raise taxes and raise fees, or they can curb spending. And everyone's so mad about all of the things that they just kind of, these cuts they've proposed in their most recent budget. Yeah. But also people were complaining when the city asked for an 8.5% increase in property taxes. Like people were upset at that, but now they're also upset that they get less. Like that's kind of how it works. Yeah. Right. And if you don't understand that, like there's people in the comments being like, tax the rich. It's like, you bozo. The municipalities do not charge income tax, right? But what they do is actually tax people based on the real estate that they own, and richer people own more real estate. So they are taxing the rich. In fact, like if you're living in the city and you aren't paying property tax and you aren't paying fees to ride the bus, to park, or to get permits, or to go to the library, you're kind of living here for free, and the city gives you a lot for that. You indirectly pay your portion of tax by paying rent, because a portion of your rent goes towards the property tax, and the same people built there like, why should I have to pay my landlord's bills? It's like, you idiot, because you're part of this machine. Like everyone pays a little bit of taxes so that you can enjoy the things in the city. Right. And people don't understand that. And it's frustrating regardless of how you think money should be allocated and whether or not the governments are doing an efficient job at allocating your funds. I agree with you. They are not in a lot of cases. But at least understand how this works. Yeah. Right. Yeah. And the biggest thing that people should be mindful of here is like our income tax here in Nova Scotia is not indexed, which most provinces are. And what that means, and federally, your federal portion of your income tax is indexed, which means the brackets creep up with inflation and with cost of living. So it doesn't make sense that our brackets in Nova Scotia are the same as they were 22 years ago.
Yeah, it's massive.
Right? So the idea with tax brackets is as you make a little bit more, you pay a little bit more tax because you're a little better off and it's your responsibility to contribute a bit more. But someone who makes $50,000 today, right? In 2020 or in the year 2000, which is when our tax brackets were last updated, they were only making 32 grand. Like adjusted for cost of living, they would make 52,000 today. They're paying now way more tax on that 52,000 than someone was paying on the 32,000 when this was initiated. Because I think our first tax bracket is something like 30 grand.
Yep.
You know, or so the average person who's making in the 50,000s pays something like 3 or 4% more tax than they would have if our brackets were indexed based on inflation. And that's actually going to increase more and more because this last couple of years, people have been getting raises, but everything's been going up in cost. So the raises that they're getting are not keeping up with the cost of living. And yet the government of Nova Scotia refuses to change the tax brackets. So you are very literally getting poorer and they're taxing you more. Like that's what's happening. Your money goes less far, despite the raises that you're getting. They're
Plus
not
you're
keeping
paying more
back,
tax.
and you're paying more taxes. And I don't mean like a nominal amount. Your percentage that you are paying is more than it was back in the year 2000. And no one talks about this. And everyone's just like, man, like I'm so mad at the landlords. And it's like, it's so frustrating.
I understand your frustration. I think it's a lack of education from people. Not by choice, but I think they really don't make an effort to educate you on these things. And I think that's why I like YouTube. YouTube's always like if you want to learn about something specific, you can search it and there's a nice video explaining it step by step.
Yeah.
Like when you watch the news, those are basically designed headlines to catch your eye, but they don't explain what any of it actually means.
It's also sometimes complicated. Like I even felt that was complicated when I was explaining it. Some people are going, I have no fucking clue what he's talking about.
I would say
right?
it's also somewhat complicated. That's why you need someone to really break it down and explain it. But then again, news and media companies are owned and controlled on what they can release, and it doesn't allow you to actually get this information across. Like they're out there to catch your eye, not to really educate you on what's going on.
Yeah.
And so I think as a whole, that's a problem. But one thing you said that I really liked was like people forget that part of their rent, a decent part of the rent goes towards property tax.
Yeah.
Which is paying for them to be a part of this system. But again, for them, they're like, oh, you're paying your landlord's bills. And it's like, no, you're paying like your portion to get to use the road that comes to this property.
Yeah.
To get to use the water and sewer systems that come into this property that we all share.
Yeah.
And so you're paying your portion. And you don't
100%.
pay the same as if you owned a house on your own. Like you don't. You pay less because you're sharing with a bunch of people in the same single building.
Yeah.
But
like municipalities have 3 levers of
mindset is
income.
broken.
Yeah. They'll get some money from the province and from the feds, but that's usually earmarked for a specific project and it's kind of can be set aside.
Yeah.
Then they have property related taxes, and that's straight up property tax and deed transfer tax. And that's the biggie. And then they make the rest on their fees. Again, that's library fees, parking fees, permit fees, like whatever. Yeah. That's the only way they make their money. That's it. There's no other way. So if everyone is going to contribute to this, they either have to be paying property taxes, paying fees, or when they're renting, they are paying indirectly through the property tax on that building. Yep. And for people to not understand that that makes sense and is actually very fair, you'd have to be kind of dumb to not understand that, because we all need to pay a portion to make sure this municipality runs. Like, we do have a lot of things here. Like, if you want the sidewalks, if you want the transit, like, you're going to have to pay for it. And the one that got people all worked up is that transit rates are actually increasing at the same time as they're going to be cutting some services in transit. It's like, yeah, that's unfortunately the reality of having a budget, is sometimes you have to save more money, and like pay more expenses. Like, if you want the service, like it's a hard thing, but everyone was clamoring, like, we don't want 8.5% tax from the municipality. You can't have it both ways, man. Like, you just can't. And someone commented, literally, who does this benefit? I'm like, well, literally
all of us.
People who pay taxes, like, it's a double-edged sword.
Which is everyone, even if you're not employed.
It is everyone. Like, well, but it's also everyone who lives in a structure, right? Like, so. Yeah. Anyway, I feel like it's beating a dead horse, but people need to be better informed on these things, because they can better lobby the government. Like, everyone's complaining about this, that, and the other thing, and no one talks about, tax bracket creep and how we are literally getting poorer while they tax us percentagely higher. because of cost of living, and no one talks about it. It's just like a thing. And we're like, okay,
Yeah.
you know,
I get it 100%. It's frustrating as hell. I think we'll maybe try and maybe make some more clips and help to educate people on that. And again, that's the point of the pod, is to hopefully get that out and kind of change the mindset a little bit. But you're right. In general, when I think the thing is, the people who get the most upset are the ones that see people succeeding and others not. And that's where they get more hell-bent and caught up. And sometimes they forget about what's actually going on in the background that's causing some of these changes.
Yeah. But then it makes you cynical, because you have to think like, all right, the government has a vested interest in like maybe not telling us, because, you know, the provincial government gets more of this money because we don't know.
I don't want to be
a
conspiracy.
Don't know.
I'm not.
Right?
I don't want to be a conspiracy guy, but I am always seem to be down that path. And it's funny that I label it as a conspiracy when it's like, it's basically just the truth. Like it's not. Like
it's blatant if you look for it.
It's blatant if you go through and you run through the tax numbers and how those systems work, and you're like, okay, this isn't a conspiracy. This is literally what's going on. The biggest conspiracy is that they're not educating people on it, but to me, it seems like a pretty obvious thing, an easy thing to do, like implementing certain financial courses into a public education system and stuff like that. And they just did it in the States. They just implemented, I think, in the U.S. board, or maybe not all across the U.S., but they added some financial literacy courses into their mandatory high school courses now. And I'm like, those few courses will literally change how everyone understands and looks at their finances.
Hopefully, yeah.
Like it'll make a massive, massive change. And I think that needs to come into play now. But I understand you're more so not just unhappy about taxes, you're unhappy with the education of people out there and understanding how taxes work and government policies and government incentives and everything that's going on. And like you said, everyone likes to point the finger. And I feel like the government's part of the reason that landlords take a lot of heat, because they tend to kind of just push it over and be like, oh, they're not so good. And they slap these laws in and that go against landlords, which then basically qualifies in somebody's head that, yeah, landlords are doing the wrong thing because government's having to intervene.
Yeah, like surely government knows what the problem is.
And so
they couldn't possibly be just distracting us by blaming these people when the fact is they haven't built any public housing of significance in 40 years. Like that couldn't possibly be the issue. But
this guy is so fired up. Now, we want to switch into our topic on what the hell's happening with this market, because it seems like it's going up. But before we do that, we got to do our key player of the week.
Yeah.
And we shouted them out on a Master Key story, but it's Lattes and Leases solely. She is 25 and she now has 33 units, and she bought them over the last 2.5 years.
Yeah.
She has an awesome IG. She's been teaching people on how to invest. She's been going over all of her different BRRRR models. She's an inspiration for us because she has grown her business and her social media presence very, very quickly. And I think for a lot of people, she's very relatable because she started at a young age of 22.
Exactly. I think that's the key thing. Like on a couple fronts, what I think is interesting about her is, one, that she's so young. And from the outset, she was just very transparent about what she's doing. She's like, I'm 22. I work my job over here. I think she's from California, San Francisco Bay Area. Yeah. And then she started, basically BRRRR model and sharing her experiences with a community that just grew and grew and grew, and then was able to quit her job pretty quickly in. And she also does a lot of stuff between states, which is so interesting. And I don't think we have that nearly as much in Canada because, geographically we're just way more spread out. But it's amazing how easy it is for her to purchase out of state and, really be able to target lifts, because certain areas just have way better lifts and they're much closer than we are here.
My favorite part is that she bought them for so cheap. Like I just clicked on hers, but she just bought this one for $70,000.
Like what
she went after cheap properties. A lot of people feel like there's this massive barrier to entry, but she's going into small towns and going to auxiliary areas or just outside the city and finding these really dilapidated, older, smaller properties. And you can still make a return, right? You got to run your numbers, and she always does, and she posts them. So again, shout out to her. She's doing great. Hopefully, maybe we can get her on the pod.
I feel like that's overdue.
Anyway, so check out her page, Lattes and Leases. But now I want to get into our main topic, and that is, in December, the average home price across Canada went down 1.2%.
Yeah, the home price index went down 1.2%.
Exactly. Now, January has felt very different. We're not done January yet as of recording time, and so we don't have the stat on where the percentages are, but if we had to guess, they're probably up a little bit. You're seeing multiple offers again. There's homes shooting for $50,000 over ask in Ontario. What the hell's going on? Why is this happening? Or why do you think it's not going to continue? What's your sentiment overall? Like, how do you feel? You're like,
well, here's the thing, man, and this is the problem. We have two giant problems when we come to real estate analysis, and maybe even three. Like, one, you have this lagging data, right?
I have a lot of problems. I don't know.
I got so one is the data lags, right? So when you're in the moment, you can't see the trees for the forest, right? You're kind of too close to it. It's like, okay, I can only know what's going on in the transactions I'm doing this month and maybe the couple people around me. And you don't really find out until weeks later what the market as a whole was doing. So there's that little issue.
Yeah.
The other thing is that, at times, especially this time of year, and when the market contracts, your sample size gets smaller and smaller and smaller and smaller. And we're having that issue with our weekly stats that we publish. You guys check us out on Instagram about the Halifax market. In some cases, it's like, well, there were 12 sales last week, right? And because 4 of them were over asking, that means 33% of the sales were over asking. And if one of them was 70 grand over, which might equate to 10%, like the numbers can get skewed in either direction very quickly.
All right, but we know the market's going up though.
Totally,
you're feeling it at least. Like I mean, as a whole.
Yeah, and it's not up from the peak of the market. It's up from Q4 of last year.
Yeah.
And I maintain that I really feel that Q4 of last year will be looked at as having been a great opportunity to buy. Like I even think of some deals for clients that we got in Q4 of last year where it's like, oh yeah, I'm looking around now. There's no inventory. If that home was on the market now, it would actually probably trade for like 30 grand more. Like I'm seeing that in a matter of 2 months.
So your feeling is that this is gonna be a leveling point, and then in the future we're gonna have sustained growth again.
I do feel that way, right? Like I feel like we're kind of finding what is probably what the base should have been. Like, we got accelerated a bit too quickly.
Yeah.
And so we had to pull back. And I think we're hitting a more reasonable stride. But the last issue we have is always recency bias, right? Everyone thinks what is happening in the last couple of weeks is going to happen forever and it's doom and gloom, blah, blah, blah. But something that's happening right now is that the people have realized this is the rate environment we live in now. The people that are buying and selling have realized this is the rate environment that we're in. They're not feeling the same thing that people felt in Q4 of last year, where they felt like, oh my gosh, I missed the bus. Now rates are going crazy. Oh, and sellers are like, well, I'll never get what my neighbor got at the height of the market. Like, yeah, maybe so, but now you got to get along and live your damn life. This is the rate environment. These are what homes are worth.
What
You're
about
either moving or you're not?
What about the fact that the rates just went up again? 25 points.
A variable rate went up,
Yeah. They're saying it's a temporary pause.
That concerned me a little.
Temporary. They didn't say this is the end of the shit.
Yeah.
They said this is a temporary pause to sort your shit out and get locked in and learn to handle 4.25 points or whatever it is. And they may increase it again because we have to get inflation reined in.
Well, the reason they may increase it again is because, and this is the double-edged sword, as I just mentioned, the market's starting to put along pretty okay again. And that's not what the Bank of Canada wants.
Stop buying houses, everybody.
Well,
we need you to cut it out. I have way too much variable money going right now.
The Bank of Canada does want to really...
You writing the over ask on your offer, screwing all of us.
It's raising the rates for everyone else 6 months from now. But that is this double-edged sword. Because
so does that not concern you?
It does concern me.
So
it does concern me.
You're saying if this is the new level spot, but if they keep raising rates in a couple percentage points, we all know it's going to multiply in the prices, and they're going to come down.
Yeah, what I'm hoping, and again, I can only speak here locally because I do think that there's going to be a continued pullback in areas like Toronto and the Fraser Valley. Or I do think those are going to continue to pull back, probably to the tune of 5 to 7% this year.
Okay.
I hope that what they're going to do is just subtly adjust these knobs to keep us in a more...
The knobs.
I'm uncomfortable with this gesture. They're going to try to keep us within a reasonable band, right? Their first thing was all right, we need to drop this thing from up here and bring it down. Bring it down one chunk in one. It has to be a shift, right? A shift down.
We're in an uncomfortable band now relative to what we were used to already. So any knob dialing that they do is going to result in more discomfort.
Yeah, I think what we might kind of see is this undulation almost quarter to quarter of up, down, but I'm hopeful that it's going to be in a band of plus or minus 3% as opposed to an 18% pullback in the home price index from the peak, right? That's an uncomfortable band. But if they can do it sustainably, I think what they would target for the average Canadian market, I'm not talking Vancouver, I'm not talking Toronto, I'm talking the average Canadian market. If they can get us in a band where we're, somewhere, a market that gets hurt a little bit is maybe down 3%, and then a market that's really putting along is maybe 3 or 4% in the positive, I think that would be the band that they would target because that's a bit more normal, right?
Do you
It's a hard task, though.
Yeah. So, and you're saying basically, what's your feeling on why is there going to be so much upward pressure? Pure, plain and simple inventory?
Supply and demand, man. Like, I feel it's like the easiest out to say that, but I'm very focused on our market here. So I'm biased, but there's a huge shortage of property here, and we have so many people coming to the city. It's hard to imagine that there's not going to be a lot of support for the value. Because not everyone has to buy homes when there's less homes. Like, if we cut the supply of homes down by 50%, then yeah, these rates may take 50% of the market, but if there's still the remaining people to buy them, there's a lot of support there.
I see what you're saying. So I guess my thought is just, like, I'm always doom and gloom. And I just think, like, yeah, I agree. We're super low inventory. And I think that's what's kept us alive till this point. But then I look at the fact that loan money, interest rates are insane. Overall cost of living is insane.
Well, stop. I'm just going to stop you there for a second. What constitutes insane for an interest rate? Because you can go out right now.
It's insane compared to what we were used to.
Okay, there's recency bias, and that some of these buyers...
but it's recency bias for years. Like, people were borrowing money. Like, my entire investing career of like 5 years, we've been borrowing money at cheap. And a lot of transactions took place in the last 5 years, and a lot of transactions took place in the last 2 years.
But there were times, you've been doing this for 4 or 5 years.
Yeah.
Right? What's the highest rate that you saw?
Like
Fixed
4?
Rate. Yeah.
4.25. So
4.25, and now we're at like 5.25. Like, that's not insane.
No, but the thing is, a lot of mortgages turned over in the last 2 years. A good percentage of them, because people even forced them to turn them over, even if they weren't up for renewal. So they dropped their rates a ton. And now you're seeing this climb back up, and a ton of people renewed at variable. And so a big percentage of the market turned over to that, right? I understand in the course of history, it's not. But I'm getting, like, my thing is, it's recency bias, but it's also, if we have a 2-year downturn, that's something that we need to be cognizant of. I do agree in the long term it's gonna rip, but I guess my concern is that, so there's all that going on. We've talked about that to the death. I totally agree that we have low inventory, but it's like, if the banks will not lend to you on that property, it's just not going to sell for that much money. There's just not that many people rolling around with that much cash that are going to buy it. It doesn't matter. Even if the inventory is so low, I say this about rent too. I'm like, even if there's just no units available, you can't just charge $3,000 because no one just can't buy it. Right?
No,
it's like when you look at like the Great Depression, when people were like, a loaf of bread was $1,000 and physically nobody could buy it. So the loaf of bread just sat there, even though everybody was dying of starvation. Right. No one could. It's the same thing.
But what have you seen for, like, there's going to be a shift, obviously, to more people taking fixed products.
Well, the next thing I think is going to be a problem is that there's not going to be the capital available to do it, because, again, when you look at, again, people aren't really paying attention, but monetary supply is shrinking quickly, right? When rates go up, money starts getting pulled back in. The CRA, the IRS are going nuts to pull money back in. All the tax hikes, more money going in. Everything is pulling money out of the system as fast as they can. On top of that, with the rate hikes, the market's pulled back. So that's eliminated trillions of dollars of value. The real estate market pulled back. That eliminated hundreds of billions of dollars of value overnight. And so all this free cash and net worth that people had is disappearing. Right? People don't carry like tons of cash. It's not like everyone's just like, yeah, I got $10 million in cash.
This is exactly how this is supposed to work.
All their investments went down. So now instead of having $10 million in investments and net worth, it's now $7.5 million. So they now need to pull out of a few things to start having some money. So they now need to pull out of some investments in GICs and different bank products that they own, which now means the banks
can't lend that money.
They can't lend that money. So now they're having withdrawals. So they're losing billions of dollars at the back end to fix this up. So how can they then put out the money even at the loan to value that people need or want to buy a home? And so in result, on top of it, you're going to have this like impact that's like, yeah, we just can only give you $600K on that house. And so the person buying it's like, well, I was going to buy it for $800, but they can only give me $600. So I can only do $700 now as a price. And
right.
Plain
But
and simple.
If the volume of transactions contracts almost at the same rate as, assets that the bank can lend against, kind of, that should wash to some degree.
That's the one thing, I guess, in Canada is there's a lot of equity and a lot of people who own their home that's free and clear. And there's a lot of older generation that owns their home and they're just not going to make a move. They're not going to move at all. But I do think there's a large population of younger people that are going to make a change. And it's going to be like, you look at the neighborhoods here, the ones that have been built in the last 3-4 years. Those are predominantly young families. And now a lot of them probably took variable product.
Oh, yeah, for sure.
And so they're all going to be in a position where they need to get out of that house. And now the bank's not going to lend at that new valuation. Like those, we saw it here. We're in brand new neighborhoods. We're selling at $300,000 to $400,000. in 2019, 2020. By 2021, 2022, they're going for $600,000 to $700,000. They basically doubled in prices on their homes. And now these people may have
tapped into that equity.
likely tapped into that equity because when you drive through those neighborhoods, they all have pools, fancy backyards, brand new cars.
Yeah, they do.
Yeah. Like,
Tall guys wearing a shirt like that.
Yeah.
You know? Hey, Poppy.
I bought this on a refi on an apartment building. No. So I actually got this at Valley Village. Not Valley Village. Winners.
I do really like the shirt.
Thank you. Yeah. I'm just getting ready for my vacation this weekend. It's I'm going to Montreal though, and it's snowing, so it's probably the wrong shirt to wear. Yeah. But anyways, so you have all these people now that have tapped into that. Most people didn't just leave the money in their home.
Yeah.
Or they didn't just leave their loans alone. They made a board to invest, and now their investments are down. So like I think all of these things, like there's a lot more going on in the background that we still haven't felt yet because it hasn't been long enough where people, it's going to cause an issue. And my bigger thing is that people aren't going to get the money to be able to buy into the next house. And so the people that can't afford to get out are going to have to drop the prices of their homes. And then it's, again, this sentiment idea that people start seeing like, shit, like that one went for 600 in 2022. Now his is up for 500 and it's not selling. This is a falling knife. I want out. Just like how everybody wanted in when it was ripping. A ton of people always want to bow out, right? Like it's the same with the stock market. Stock market's quick because people can do it with a button click.
When or what causes it, right? Like because right now it's not happening. Why isn't it happening? When is it going to happen? And what's going to cause it?
I think it could be further than this year. Like I genuinely think it's going to come further than this year.
Like what's going to be the moment where it's like, okay, is it just depleted savings? Is it?
Well, I think the turnover point that's going to become like the big thing is when like the general news media takes on, or a big company, someone bows out, like a big investor bows out, and it becomes a news story. Like, oh shit, Killam Properties is going belly up. They got to sell some assets. Like for example, like Swiss Bank is having trouble now funding some of the loans because they can't fundraise capital.
Right.
So they're talking about listing the Swiss Bank Hotel, which is like one of their investments, for $400 million. They need to sell that now to help get liquidity to keep funding loans. And so you're like, oh shit, one of like the biggest banks in the friggin' world is now having to sell one of its prize assets to keep funding loans. Right. And so when more of that stuff starts happening, right? Like, so I think institutionally, you might see more of that stuff start to happen, especially because people don't realize, but a lot of these big buildings and giant assets are returning like 2% or 1%. So when the rates went up, they're literally upside down in these buildings, and so they need to start dropping it.
The only thing I could see there is that when it gets to the institutional level, there's going to be so much pressure on these central banks, because the reality is they want us all tight with our pennies and not spending. And they're like, oh yeah, you guys should probably be a little bit more careful with your money and you should buckle down and blah, blah, blah. But when the major institutions, like there's a reason, you know, with the crisis in the States and 07, 08, like people were allowed to go bankrupt, but the companies got bailouts.
True.
Right? So some of these institutions are quote unquote too large to fail. So
I don't think that they're going to fail, but I think it would be more like, okay, the news stories will get into people's heads, right? Like if I'm a homeowner and I'm been on the fence for the last couple of years about selling, and I now know that I missed the peak and I do want to sell in the next couple of years. I want to sell anywhere in the next 5 years. And now I see that the big institutions are starting to offload some assets. I'm like, shit, maybe I should just get rid of it now, because for the next 5 years, I probably do know better. So I might as well get my money today and make my move. Do you know what I mean? And then they start to come onto market. They start to dump off and prices start to fall because people can't pay for, like, nobody's buying these houses cash. Like, just on average, people are not buying their homes cash, and they don't have the cash, right? And rightfully so. That's kind of how it's always made sense to get ahead in this world, in the North American first world, that you got to borrow, and you got to have all your money invested and stuff like that. So I just feel like the capital shortfalls, interest rate hikes. The other thing is wages have not grown a ton. Like, the cost of living has gone up a bunch, but wages have not chased to follow. And if anything, a lot of these like places that had crazy high paying jobs, like the tech industry, they're doing mass layoffs. Like, that was the way to make a ton of money now, is you get your comp sci degree, you go make $200,000 a year right out of school. There's 1,000 job options. You can go to the coolest place. You can drink kombuchas and fucking wear funny hats and make a bunch of money.
Yeah.
And now those are all just getting cut. And so it's like, shit, man. Like, yeah, I understand we still have an inventory crisis, especially in Canada, even more heightened in Atlantic Canada. But I'm like, for me, the tipping point might be if they ever cut the immigration targets. Because they're going to be like, you know what? Everything's super expensive.
That's coming.
Every year, the rents keep going up. We have rent caps everywhere. But guess what? Everyone's going to say we have 4 immigrants renting a 2-bedroom apartment to make it work, and that's why they're willing to pay $2,000 a month. So you know what? They're going to finally cut immigration, and then it's going to be like, oh shit! Now the shit hit the fan.
So this is a total digression, but I had dinner with someone who works kind of front line in the immigration. I don't want to say industry, but in that world, like very front line, and very much not the recruitment side, not the promotional side, but these folks are here now, and we need you to take care of them and set them up. And it was something like the federal government is spending $500,000 a day on hotel stays for immigrants.
Yeah, so tell me they're not going to cut this. Everything's getting beat down. They're running out of money. There's no money coming in. They're raising taxes. People are like, holy shit, we're spending $500,000 a day. So we're spending $15 million a month. That's not $200 million a year.
I can't verify that number, and I'd love to kind of. I wasn't expecting to talk about it here today, so I didn't look into it. But that's someone who is very knowledgeable on the front line, and it doesn't sound unreasonable.
No,
when you think of the numbers and what these hotel accommodations and the sports staff associated with it.
I would feel that. Imagine you live in Canada and you're seeing all the wage subsidies that they provide to people moving here, which I think is great because they want to incentivize people to come here. But you're living here and you're like, man, you guys are raising my taxes. You guys can't provide me the services that I need. I can't get into the hospital. Meanwhile, you're paying this guy $50,000 to come here to make this line bigger, and you're not helping me who's been in this country for 30 years?
Yeah, I know. It's going to be a very interesting topic at the next federal election because this is the other reason they're going to claw as much money as they can right now. Every CERB, you got $2,000 for CERB, we're going to try to get that back. They're going to get all, because then they're going to announce a bunch of spending to help everyone out right when it's time for the election, which again, to bring us full circle back to the start of the episode, is your own damn money. It's your own damn money. Like, they're just repackaging it and selling it back to you, to buy your votes. So
to summarize though, where do you think, what's going on? What do you think this is now, after we've kind of bitched a little bit, do you think this is a temporary blip in the market? Do you expect this to kind of run for a bit? Are you still on the thought that 2024 rates are going to pull back after they said it's a temporary rate hike?
Well, I think short term, like next 3 months, the market's going to be strong here.
Good spring.
It just is going to be a good spring. I see no other way around it. I mean, you could drop, if you dropped like 50 homes on the market today across the city, they'd all be gobbled up, but you might see that take a bit of the demand out there, but that's just not happening, unfortunately. There's not that much supply. So I think it is going to be a good spring.
Yeah.
I think that the pinch that you're talking about is going to be dragged out longer than you might think. That's why I was asking, what's going to be that tipping point? Because it's so individual. It depends on when someone renewed. It depends on what's going on in their life, right? Like, it depends on what else they're going to cut from their life. It's hard to know when that shoe is going to drop, or if it even will, because...
And people are running out of money. People are running out of money. The average person is not having a ton of cash sitting around.
I believe it, man.
You look at car prices, they're flying down. Because people are dropping, they're returning their vehicles. People just cannot make these payments. And I know, having a small staff, chatting with them and chatting with the guys on site, they're like, man, I've never felt this poor. I haven't felt this poor since I was a teenager.
And yet they've never been taxed more.
Yeah, well, and I know a lot of it's going to taxes, and they're not sitting there blaming anybody specifically. They're just more like, this is insanity. A lot of these people just they're not trying to do anything to take over the world. They just want to enjoy themselves and be happy, and they go to work, they get their pay, and they can then live normally. They don't need to be getting anything fancy. But even that, they're struggling.
Are they homeowners?
This is insane.
Most of them?
Some are, some aren't. I know, I have guys that work for me that own their homes free and clear. But the bills on a monthly basis are still out of this world.
Mm-hmm.
It's
there's going to be a real there's going to be a two-pronged rage and a two-pronged sense of I don't want to say impoverishment or tightness. The homeowners getting it on one side through their payments and whatever, and then people who don't own property but are constantly looking that further and further out of reach because their savings are depleted. So it'll be interesting to see how those kind of
There's always this idea, and I mean, it kind of already happens, but I don't know that our markets in Canada especially are strong enough for this to take place. But like you're saying, you have the division where there's those who own and those who don't. And we already kind of have that division, but it's not as prevalent as we think maybe, or it's people always seem to be able to get ahead still to the point where at some point in their life they're able to buy a home if they really, really want to.
Yeah.
But places again like Ontario and BC, that's not always the case. And I think it's getting across the board now in Canada where almost everywhere is in that situation where they're not going to be able to do it. Surprisingly, I mean, not surprisingly, but the main two places I think you'll always be able to do it, or I'll have a longer likelihood of being able to do it.
New Brunswick.
Alberta.
New Brunswick.
Alberta and Quebec. I would say those are two places because
New Brunswick
Quebec
is the most affordable place to live right now. But
yeah, I think Quebec has really affordable housing across the board, even in their cities like Montreal, and Alberta has also decently priced real estate, but with very high incomes. And Quebec has also like the lower taxes and a lot of things that can aid you in getting into a home. But I always wonder,
Alberta.
And so does Alberta. So like, great, these places have lower taxes, and sure enough, you can live for cheaper. You actually make more money. Like everything wins. The average salaries are higher. There's more corporations there. There's more industry there. Kind of shows proof of concept that like
think of the two provinces that probably get villainized most.
Alberta and Quebec.
Federally.
Alberta and Quebec.
So maybe there's a reason that certain governments kind of run on a platform.
They're also most obsessive with the least rules. Like they are not trying to consistently and constantly slaughter their people with rules. But anyways, what I was getting at is that this might be another one of those times, and I think it will. And this always happens during these times of financial hardship. Is that you have the division, and it grows a lot more. Where there's the haves and the have-nots. And I think in this case, it will be owning real estate and owning homes. And I think I'm just like, will it get to a stage where an entire segment of like home ownership, like that's just like a certain class of people effectively, and you'll have a huge majority of people now that are going to start just rent for their entire life.
Well, and in here to extend that conversation further is like, this is exactly why you see that like private property law used to be one of the strongest laws there is.
Yeah.
Right. And in some regions, rental law effectively is like your rental rights are catching up to your private property rights.
Yep.
There's a reason that I think it was in San Francisco, someone had to pay like hundreds of thousands of dollars to get a tenant.
I was going to say someone in San Francisco paid $750,000 or something. I think it was, and so that's effectively the price of a home.
So who has more rights to that property?
Yeah.
Right. So, all right. Well, that's
anyways.
Great talking
that's a wrap.
to you, Neal.
I gotta run. I think as a whole, in summary, let's finalize here. In summary, you feel that this is gonna be a good spring.
Oh yeah, I think this is going to be a good spring. I think the next 3 months is definitely going to be strong. Year as a whole, I feel more optimistic than you. I think we're going to operate in a
neutral,
in a tighter band that's going to be relatively neutral. It might be kind of what the market should be, which is 2 to 3% a year. I'm worried that not worried. I feel we might be a little bit more than that. But I also don't think Bank of Canada looks at us at all. And the reality is, I think Toronto and Vancouver will still struggle a bit in the periphery, and that'll hopefully be enough to keep those Bank of Canada rates steady.
Okay.
But they're basically sending a message like, don't you guys get carried away in Toronto and Vancouver. Don't you get carried away, or else we're going to turn this knob more. But they don't care about us, man. They don't care. So we could go up 7%. If the rest of the country's down, they won't do anything.
And you think immigration might get cut?
I think that we are going to come towards a couple election cycles here where that conversation is going to be had. And it's interesting because when that conversation was raised at the last federal election, you were deemed anti-Canadian, maybe even racist, if you said we should maybe not have as many immigrants here. And you and I are both pro-immigration, but that was the way it was presented. Yep. And I think that narrative is going to change a little bit because, one, do we have the resources? Do we have the systems in place for them? Mm-hmm. And two, are we being fair to them? If we bring them over here and we treat them like this, I don't think we are.
Yep.
Right? We are not delivering on our promises. We're not delivering on who we like to think we are as a country when you bring these people over and you exploit them and you don't give them any quality of life in a lot of cases. Like it is tough out there.
It is tough out there. In summary for me, I would say I'm with you that we'll have a strong spring. I think the turning point will be, like you said, political movement combined with potential further interest rate hikes later in the year, combined with large institutional, whether it be banks, investment funds, other companies starting to fall apart. Like we'll start to have some companies that do go bankrupt. We'll have some companies that start to drop off assets. And I think with that mixed with another rate hike and some political turmoil, I think it'll combine to create some issues. Again, I don't think it's going to be across the board. I think great locations will still stand up. I think it'll be auxiliary markets in places that didn't really make sense.
Can I just add one little thought there? The issue is fixed rates are tied to the overall economy.
Yeah.
Variable rates are not. So we could see a continued situation where variable rates keep going up, but the fixed rates actually come down.
Yeah. Yeah, exactly. 100%.
Right. All right.
All right.
Thanks, guys. Pleasure as always. Don't forget like, follow, subscribe, all that stuff. Questions down
Send
below.
us your questions if you got one. Also, someone asked before, if you're actually still listening to this point, if you have a key player of the week that you want to send in to us, let us know and we will gladly shout them out. We're always looking for new people. So
love hearing about your successes.
thanks, guys.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.